Okay. So I think that it's fitting to start with the why and the how. Okay. So why is private renewable generation so important in both Zambia and Zimbabwe? And then the how. How is private generation actually meeting the needs of energy-intensive users, and what sort of solutions are being implemented, what sort of strategies are being proposed in order to meet these needs? So let's start with the actual customers. So Amend and Cavin, I think it would be fitting to start with you, wanting to understand your why and your how, and what you're doing for your businesses in this space.
To answer the question why it is imperative for us to go private generation, I think we all know in our region the vagaries that are affecting us, particularly for mining and the big consumers like us. There are naturally degradations that have happened or deterioration that have happened in the national grids, and we have faced a lot of instabilities in the generation of our power. And for us as mines to operate, mines operate 24 hours a day, and we operate in very harsh and very hazardous conditions. Where when we are operating, sometimes you need power to be able to run as well as to create safe conditions for the employees. So we would need a very firm and robust power supply system, and that then impacts on the need to have a strong power supply system. We also have issues to do with meeting our financial obligations in terms of controlling our costs. We need a predictive cost structure, and the tariffs need to be more predictable than what we normally have. There is also issues to do with ESG pressures that come in to reduce our carbon footprint in the different scenarios that we have. I will speak again in terms of Caledonia in particular. You know that in the last 10-15 years for Caledonia, we have been on a growth trajectory, and what it has done, it has brought us under pressure to be able to create a resource base for us to be able to operate at the increasing rate that we are running at. I can speak from 2010. You probably have read that we put in a diesel generator plant that could take up the mine and run in the event that we lost power. But as we also went towards the late 20s, we were putting up what we call the central shaft, those that also read, where we were going to gravitate from the old mine to the new mine, where we also installed the biggest drives on the mine. And that has come with higher demand for power, and we couldn't get that from the national grid, and naturally we ended up putting in a solar plant, and that is an indication of how imperative it is to generate our own power privately. Of course, there are issues that then come in. We are not experts in generation of power. Whilst we built our own solar plant, we ended up having to offload it to one of the private major players in the region, Cross-Boundary Energy, and they are now running the solar plant that we built captive to our setup, and we continue to explore options of how we can strengthen our power supply at the mine. Without saying much, I'll probably leave to Ahmed so that he can also say more.
So the first issue is we recognize as, I'm Ahmed Chiduma, I'm Chief Technical Officer for Zimplats. I'm also an Executive Director on the board. I'm sure Zimplats started off operations in 2001 by way of introduction. and it grew some mothballed assets into world-class assets now, which assets over the last 3 years we have been really seized with significant expansions, to the extent that we have expanded by about 1.2 billion to date. And we are actually aspiring to 1.2 billion United States dollars, to the extent that we still on the expansion journey, and we intend to invest a total of US 1.8 billion dollars. The reason why I'm raising this issue is all these assets, as you understand, they rise from feasibility studies, techno-economic viability analysis, bankable feasibility studies, in which case this bankable feasibility studies, a key cog of the bankable feasibility studies, the risk analysis. And one of the risks that comes out front is the availability of utilities. And power, when you rank the utilities, power is the number one high risk utility that needs to be mitigated ahead of investors putting in this type of investment we're talking about. So we recognize also that the power challenges can only be solved through a syndicated approach. I think it's a multi-stakeholder approach. That's the private sector has got its role to play. And also just from the trajectory of our expansion, like I've indicated here, if you grow by 1.2 billion in less than 3 years, there's certainly supposed to be significant isostatic adjustments in terms of ensuring that you get that power supply you are looking for. In fact, our power supply grew from 60 megawatts, a mere 60 megawatts, to 120 megawatts, and is still projected to grow to about 210 megawatts by 2031. So hence the question to say, if it can only be syndicated through it can only be solved through a syndicated approach. Therefore, we need to play our part as a private sector. How are we playing our part as Zimplats? We saw it fit that we also support government policy in terms of establishing certain generating capacity after the government had deregulated the generation environment, to the extent that we are establishing a 185 megawatt solar plant in stages. We already commissioned a 35 megawatt one in August 2024, and we are actually busy constructing a 45 megawatt owned by us, to be operated by us, and with our own skills that will upskill. And that will take us to a total of 80 megawatts by August next year. And we're still on the journey like I have indicated. The reason being that when we look at the success or the rate of establishment of new generating capacity from the power utilities and other players, it's actually falling short of what is required. So at the moment in Zim, we already have got a long-term power supply deficit, which deficit means that we have to play our part. Then the other reason also why we are also in this space sitting here as no longer just a mining executive or a processing executive, but also as a power generator, and also having significantly assisted in some of the financial investment for some of the transmission infrastructure within our locality. It's the commercial arrangements. When we assess the commercial arrangements, I have to be frank upfront, between us owning an embedded solar generating plant and doing it through the IPPs, the cost matrix just favors us owning the solar generating plant. Some of the commercial arrangements, things like take or pay or any other commercial arrangements that come through, makes it very complex for us to be sitting just in between an IPP and a power utility and try to absorb some of the risks that arise from that commercial arrangement. So one, it's coming out much cheaper, and that solar farm is generating a much lower tariff compared to an off-the-fence type of arrangement. Granted, we can only do that while the sun is shining in terms of metal prices. So while the metal prices are right on the crest, we go in and we reposition ourselves and we own these solar farms. The other reason being that power has become a significant cost into our input. At the moment, 12%. Maybe last year alone, we spent about $94 million US just in power. And therefore, it becomes a critical conversation, particularly from a commodity business where prices are given by the global markets. We need to position ourselves in the lowest quarter from a cost point of view. And therefore, we select the best effective option for us to have a competitive advantage from a cost leadership point of view. We also have been learning to try and understand whether there are any significant technical risks that arises from us owning this type of power utility scale generating plants, to the extent that we have obviously analyzed the risks and put in place attendant mitigants.
I think I'm just going to challenge the IPPs in the audience to have a discussion with the men, maybe during the question session or after this, on basically own build compared to an IPP solution, but I'll leave it at that. Just sticking with Zim for a moment longer, I think, Mangarendui, if I can actually then just turn to you, and just from a regulator perspective, that's basically, you know, taking steps to unlock private generation of renewable energy. Maybe you can weigh in on the why and the how.
My name is Mangarendui. I'm with the Zimbabwe Energy Regulatory Authority, which is the energy regulator in Zimbabwe. Basically, we do regulate three broad sub-sectors. You're looking at your electricity sector, you're looking at petroleum as well as gas. And in terms of electricity, we are at the forefront of ensuring that we do market reforms. And part of those market reforms is allowing participation, both at generation, transmission, distribution, and retailing of electricity. And that's why you'll find that with the Electricity Act in 2002, we did open up the whole energy market and allowed participation in these four broad subsectors of generation, transmission, distribution, and retailing of electricity. That's why you'll find that we do have independent power producers generating electricity, supplying to the utility itself. We have also seen captive power plants, which the previous speakers have been speaking to, where they are actually financing investment in generation, or actually undertaking generation projects to supply their own projects. So this is as a result of seeing the need in terms of the power requirements on the grid, and realizing that the government itself, through its national utility, will not be able to generate enough capacity to supply the growing demand. So demand itself is driving the various market reforms that we are actually undertaking in Zimbabwe. And to date, I'm happy to report that we have several IPPs that are generating power, supplying to the grid through the state utility, generating power, supplying to customers of their own choice with negotiated PPAs. And why we are promoting such kind of investments is mainly because we have realized that it's the mining companies that have got land concessions, so they are able to undertake power generation projects at their own sites. We have also realized that mining companies, they also do have the financial resources to actually undertake these projects, so they can actually invest in these projects. And most of the IPPs, when they come on board, they actually want to see the demand, and the big mining companies have the demand as well. So that's why we have restructured the whole energy sector to allow generators to supply power. We've allowed consumers to supply power. We've also allowed these mining companies to import power from the region. And I'm happy to report that Zimplats, which is previously spoken, are actually also importing power from the region to supply their own demand. And we have actually removed barriers towards such kind of activities because we don't necessarily need to license them, but we actually take those regional generators as deemed licenses within Zimbabwe. So the licensing processes themselves have been made so much attractive to ensure that there is a lot of investment, there is a lot of power coming into the grid. And I think also what has necessitated that is also the attractiveness in terms of the wheeling tariffs, which is also making it financially viable for independent power producers to produce power and sell to the consumers, or for these big mining companies to buy power to generate their own power. So all these reforms are as a result of the increase in the demand that we are seeing in Zimbabwe. So I think that basically answers the question why.
Okay, so then turning to Zambia, and I think, Anthony, would all be interested to understand FQM's strategies and solutions to the extent that you can share.
I'm Anthony Mukuma. I'm the director for First Quantum Minerals in Zambia. First Quantum has been operating in Zambia for about 29 years now, will be 30 years next year. I think probably the best place to start is to just cover what does mining mean to Zambia. And most of you will know that, that Zambia's growth and Zambia's economy is very dependent on mining. 60% of Zambia's exports come from mining, and Zambia's GDP, the contribution of mining there is about 12 to 15%. And some of you might have heard this morning that Zambia has got an aspiration to get to 3 million tons of copper production by 2031. That aspiration is there, and what it actually means is that Zambia will be short of power. We will need about 2 to 3 gigawatts of power by 2031. On the other hand, it is important to know that mining, the mining sector, yes, contributes a lot to the exports in Zambia and to GDP. Mining also is the largest consumer of power in Zambia, consuming up to about 55% of power. And that's really key. So when we look at the growth of the economy, energy is going to be a key component of it. And if you think about it in terms of the current construct where we've had a drought, that problem gets much, much more complex. So what we've seen is, as a mining business, we cannot expect to see growth in Zambia without contributing to the energy sector. And that's something that we've been actively involved in. And over the last, say, 24 months, we've been involved in a power project in Chisamba, a solar plant, with some partners, with an IPP and with ZESCO. We've also got a project which is a solar wind one, and it's about 430 megawatts of power that we're working with Total Energies. And it comes online towards the end of 2027. So the point is that as a mining company, we know that we have to be active in the energy space. High energy users cannot be passive in this construct. They have to participate and make sure that to see growth of the sector, that we are also involved on the, in the energy space as well. Just a bit of background, back in 2004 when we built Kansanshi mine, we built the line, the transmission line out of Luano into Kansanshi. And when we built our next mine in 2012, we built a transmission line, 600 kilometers of line, of 330 kVA line, from Mumbwa into our mine site. So we've got practice with these things. I think what we're looking at now is how can we get involved more with IPPs, and in some cases, like in Panama, we've had to build a power plant, ourselves. But in Zambia, we see capacity. We know there's IPPs, and the potential is there, and we are supporting quite a few of the projects that are coming online.
Thanks for that, Anthony. Richard, I mean, would you like to just weigh in terms of what you think are the key changes that have occurred in Zambia that has actually driven private renewable energy generation?
I am the board chairman of Zambia Research and Development Centre. My name is Silumba Richard. Our job as Zambia Research and Development Centre is to inform government on various research results that we get so that government can make informed decision. So when we look at the energy sector today, we are going to say that the biggest consumers of power are the mining sector, so to say. So it is just imperative that the mining sector gets involved in production of power, and we have seen from our colleagues who are in the mining what they have said. We have gotten a lot from them that they cannot sit and wait for ZESCO, for instance, to provide power to them. They have gotten into production of power as it is. And this is very commendable. As Zambia Research and Development Centre, we believe that government should even move further to ensure that we put up a statutory document to give leeway to mining companies to continue producing power for their production. That should not be the only end. We need also to ensure that we talk about investment in real production of these products that give us renewable energy. For instance, we have talked about all kinds of investment, but we have not touched the issue of storage. We have lithium in Zambia. We need investors to come and produce lithium batteries here in Zambia. And I'm happy to hear from the Minister of Zimbabwe who said that they are banning exportation of lithium because they want the locals to benefit. When lithium batteries are produced in Zimbabwe, it means that there will be more jobs. This is what we want in Zambia. More production. The catchword is production. All investment brings about production, and we want to invest in production of lithium batteries for storage. We want to invest in solar panels, for instance. It is not enough to just go and get solar panels from elsewhere and bring them to Africa. We need production of solar panels here in Zambia. So that is the kind of policy that we would need if we are to be independent in terms of power. And by the way, Africa, as you can see, the mining sector is very active because they are dealing in minerals. And the global trend is that we have critical minerals, the energy transition minerals. All these, about 80% are found in Africa. And we need to take advantage of this because this is the opportunity that Africa has to benefit in terms of development, and all investors are welcome in this sector because that is the way to go. That is how we can have this cooperation where we partner with foreign investors, we invest in Africa, whilst we are providing jobs and the actual or tangible development for Africa. So, by and large, the Zambia Research and Development Centre would want the challenges that we are facing in Zambia to end. And how do we end these challenges is by ensuring that we partner with the mining sector so that the mining sector can take a leading role in producing power so that we can decouple from the hydropower which is overstretched in Zambia, and we are now having poor Zambians having to face devastating load shedding where people could only have 3 hours of power in a day. This must be mitigated, and we are hopeful with this conference, because we have seen that the mining sector has really taken much effort in ensuring that they participate in production, and we support this kind of development that we have seen.
Thanks, Richard. So, I mean, obviously acknowledging the role that mining companies have to play, I think the next thing that we should delve into is effectively what the perceived challenges are in terms of unlocking that real value of private generation. And I think, Mangarendui, let's maybe start with you from a Zimbabwean context, and just in terms of what what you've already done, and effectively your plans in the future, basically to solve some of those challenges to the extent that you can from a policy perspective.
I think let me start from the value chain in terms of ensuring that we have generation happening from both the mining companies or even generators themselves. First and foremost, you are looking at the issues of licensing and permitting. From the regulator's point of view, what we have done is to try to reduce the requirements so that it doesn't become a barrier to entry for participants in the generation sector. So you find that first and foremost, the licensing fees have been reduced drastically to ensure that people come on board with their power projects, and we have as much projects as possible. We are looking at issues to do with standardized PPAs. Through the ALSF project, we now have a standardized PPA, which people that want to participate within the energy sector can actually adopt that standardized PPAs. And you'll find that there is also the myth that when things are submitted to the regulator, they are subject to a lot of scrutiny. But basically what we have done is we are saying, as long as the parties to the PPA have negotiated in good faith and have agreed to that PPA, the regulator will not require them to renegotiate. So that's something that would also want to demystify, that submission to the regulator or approvals by the regulator doesn't necessarily mean that you are going to renegotiate the PPAs. So having standardized PPAs and us approving the PPAs is to ensure that all the clauses that are supposed to be in the PPAs are in there. So the risk allocation is catered for all eventualities. We are also looking at issues to then do with grid interconnection, because most of these power generation projects, definitely they will need grid for stabilization. So as the regulator, what we have done and working with the utility is to ensure that there is seamless interaction between the generation projects happening and the grid impact studies that will have been done, and as well as also the requirements for these projects to interconnect. So that has also managed to accelerate investment in terms of generation and projects. And we are also looking at the aspects to do with use of system charges. That has also been a major breakthrough in terms of power projects in the country. We are yet to have finalized the actual use of system charges, which we would want to be transparent, independently derived for the benefit of both parties, the utility themselves in managing to recover the costs of them transmitting that power, but also enough for the power project developers to be able to make a good return. So that's something that we have also done in Zimbabwe to ensure that there is full participation of both parties in terms of generation projects. And you also find that the aspect of, I did talk to the different technologies as well as the various other requirements that you find from other government agencies. What we are hoping to see in the near future is a one-stop shop where all the permitting and the licensing requirements will be covered under a one-stop shop, so that we also try to reduce as much as possible the turnaround time for which these projects will require in terms of licensing. So there is a lot of reforms that are happening in Zimbabwe, which is meant to ensure that power projects are implemented within the shortest possible time.
I mean, I think then it would be fitting to turn to Amend and Cavin, just to actually understand then from a customer's view, what you perceive as the challenges, and maybe with the focus on the difference for you in terms of an on-site behind-the-meter project and one where you actually get the electricity through a wheeling framework?
I think before I delve into that, I must thank the Zimbabwean government and the regulatory authority for liberalizing the generation as a starting point in terms of setting off the challenges that we have in terms of this initiative. But there is more that needs to be done in terms of consistency, in terms of policy, as well as creating vehicles that allow motivation for more of these arrangements. So thank you very much, Mangarendui, for the presentation. But I think that as well as the PS, I think there is more that needs to be done in that area. But in terms of our challenges, both in terms of on-site and off-site, I'll speak for Blanket Mine. The biggest challenge that we've faced we've got an on-site arrangement as well as an off-site arrangement. The on-site arrangement is the PV plant that I talked about, that I said we have offloaded to cross-border energy, who are the IPP, but captive on the mine. It's behind the meter, and we're looking at upgrading it. The biggest challenge that we have there is the microgrid that we have created for ourselves. Because of the instability in the grid, the voltages will come at very varying voltages, and so much that instead of us creating using the solar plant or the generators, or even if we have the batteries to be able to create backup, we actually now having to supplement or create a booster for the grid, even when the grid is available. So, and that tends to then create unnecessary pressure financially, operationally, as well as in terms of certainty, in terms of when, how and when things are going to happen in a certain expected way. You know, when we are operating, there is some plan that we have. You must be able to work according to that plan. It also puts pressure in terms of that you got to have enough money to be able to synchronize between, for us, between the generators, the solar plant, and the grid, so that the network that we have can be able to coexist. That requires quite a bit of cash, so that you are able to create that operating framework. Then in terms of the off-site, you'll be aware that, unfortunately Ed is not here, Ed Cross is not here. You'll be aware that for big consumers in Zimbabwe, we have had to form what is called the Intensive Energy Users Group. Thanks again to the government and ZRDC for allowing that arrangement to be there, where IEUG is a trader for intensive energy users, and they are basically facilitating an off-site IPP, ZZEE in Nwake, to be able to give power to individual high energy consumers. It has worked well since 2023 when it was established, but it is bringing also a lot of issues now, particularly now, where policy inconsistencies that I was talking about are beginning to threaten again a very good initiative. You don't know what's going to happen tomorrow, because IEUG is just a group of people that have come together, but they don't have financial muscle to be able to manage the risk that we thought we had transferred from ourselves to one entity that can speak for a number of people, even as we speak as Chamber of Mines. And we think that risk, that challenge, if it's not addressed, may actually put us off on a footing that we had thought we had found for the mining industry.
Yes, certainly our technical challenges are different with my colleague here, but thanks again the regulator and the Zim government in terms of deregulating the generation environment, and also in terms of the sort of strong stakeholder relations we have in moving our agenda forward. So technically for us, being a large mining consumer, we almost tied to the grid. We probably a transformer or 2 transformers away from the generating station. We're consuming off a 330 kV substation very close to our operations, just stepping down to 132. So matters of coordination between the embedded plant and the grid are not significant for us. And also the type of technology that we chose in terms of inverters has got the necessary capabilities to be able to see the grid on the bus bar and generate to synchronize automatically. They even have capacity to be forming, to be helping the grid signal to be formed better than what it is. So in terms of the cost-reflective conversation, cost-reflective tariff, it's a very good conversation. And in some circumstances, we have been supporting the power utility, where we think the sort of tariff that they are getting at a certain point is no longer economic. But it's important that the dimension of cost efficiency needs to be attended to. That in the cost-reflective tariff, it has to be reflective to the extent that the efficiencies have been optimized. I'm not sure if I'm getting out. So there's benchmarks, there's standards that needs to be met. And we are very much cognizant of the fact that certain efficiencies will not be addressed overnight. And we are very much excited in the sense that one of the things that addresses efficiency is just economies of scale. So we have seen large generation plants coming on stream. We are also seeing certain old thermal plants being refurbished. That alone is going to shift the needle in terms of the economies of scale and the cost of the tariff thereof. The one thing that we also faced, obviously being pioneers, is from feasibility to contract negotiation. Contract negotiations took almost longer than building the plant itself. So we are happy, I think I have heard from him that certain agreements are now going to be like standardized, so that there's a general guideline in terms of what we discussed. What we have seen, the reason why it has taken time is this whole issue to do with how we apportion risk. If you are an IPP and there's a risk that is arising from your own fault, that risk must sit with you. And the liability that materializes must sit with you. So this is the conversation that we always have. Let's do a risk matrix table and we see, if you want take or pay, what is that you give me on the other side of the column? So that's the nature of it. And that has taken a very, very significant amount of time. Then the other challenge that we are facing is the environment is changing so fast for us. And by the way, we are miners sitting here talking about power and tariffs and billing. We are novices in that particular area. But we can't remain novices at the moment because we have suddenly become generators. So we have to be able to adapt to the convoluting landscape that we are seeing. So that's a challenge that we are dealing with also in terms of making sure that where we are executing the project, we get tier 1, tier 2, tier 3 owners, consultants, and all these things so that we ensure that the level of technical risk mitigations is okay. But in general, I would say the last hurdle is probably debatable and worth discussing. The fact that only the generation has been deregulated and the transmission system is not yet deregulated. What are the pros and cons around it? Because like what my colleague has said, when you adjust tariffs, it's very important that it has to be done in a manner that is not too disruptive from a planning point of view, and also in a manner that it talks to certain fundamental economic indices. So we have seen in terms of the credentials, the signature to which tariffs have changed in the past, is that some of the changes have been quite significant, and they render certain long-term strategies less attractive. So it's very, very key that that aspect also needs to be looked at, recognizing that certain legacy issues have to be addressed, but going forward, that aspect needs to be looked at. Basically, that's my contribution. Thank you very much.
And then, Anthony, over to you from a Zambian perspective.
I think the first thing is maybe to deal with the positives. What we've seen in Zambia is cooperation between ourselves and ZESCO and the regulator, making sure that we can get over some of these hurdles quickly. On the challenges side, the major thing that we see is issues around bankability and the definition of it, which in my view at the moment is quite narrow. It's quite risk averse. So what we continue to see is IPPs coming through, and the focus really is making sure that they are looking for zero risk, and there's no such a thing as zero risk. Risk will always be there, and risk has to be shared. So the financing side is so slow at the moment because of the definition of how to get the money flowing, to the point that we've got projects that have been standing for quite a number of years and not moved an inch because the financing won't just flow. So we need to really address that, and that's something that has to be unpacked and make sure that we can look at ways of financing the projects that are out there and make sure they come online in time. The second thing is the lack or the state of the infrastructure. So you will find that there's potential for a generating plant in location X, but location X isn't connected at all to the grid, or it's connected, but the grid is in such a state that it needs investment. So companies like ourselves are having to go back and make sure that we provide the financing for the infrastructure to go in first, and then the producers can then come at the back of it. So that's a challenge that we continue to see. And perhaps finally, we also see a challenge around the generation will be in one location, and the potential off-taker is completely on the other side of the country. And the level of investment that is required is quite huge. And the off-taker being able to invest in that project cannot be justified. And so there's need to get other players coming in and investing in infrastructure to make sure that power can flow from where the plants are to where the consumers are sitting. And that's a gap which we see repeatedly and needs to be addressed.
Thanks, Anthony. I mean, Richard, from the research that you've done, do you want to weigh in on what you see as the perceived challenges?
The biggest challenge that we have in Zambia is that, many of these renewable energy projects, they are worth billions of dollars, very expensive. So you find that we have very few players in terms of local players, and we are dependent on investors. And the other thing is that we have gone away from the kind of electricity production that we used to do, as my brothers stated, where they are now looking at the old production of thermal and so on and so forth. So those are the areas where we need to deal with as well, because if we focus on high money projects, we are not going to move as fast as we can. And we as Zambia Research and Development Centre are looking at other solutions such as green or clean core power production, coal-based power production. As long as it is clean, as long as we are removing the carbon dioxide that may pollute our environment, that is something that we can look at, and I'm sure Zimbabwe is looking at it as well. And we should also be thinking about other green sources. The Minister of Science and Technology is not here to tell us, but I'll tell you the secret. The Minister of Science and Technology is working on a bill, a nuclear bill, so that we can now look at nuclear power sources. And they're in conversation with Rosatom and so on and so forth. So these are long-term power solutions, because this country is in dire need of power. So much that we need foreign investors, we need everyone to come on board, we need the mining sector to invest more in power, but still we cannot quench the demand because the economy depends on power. So the challenges are that some of the solution, they gobble a lot of resources, and we see fewer players there. This is why we talk about partnerships, more investors to come in, and so on and so forth. But we should never neglect other sources of power that we need so dear. And the only difference we have between Zambia and Zimbabwe is that Zimbabwe has got alternative sources as well. We as Zambia, we are lagging because we neglected everything. We only depended on hydro. This is now we are trying to leapfrog with solar plants and so on and so forth, but it's a little bit late. So we now have to push our mining sector to get in and invest more. But the challenges still remain. So I think from the research perspective, we need to source for many sources of power, including nuclear power production as well, clean coal production of power, and so on and so forth, and solar as well. For solar, we need to ensure that investors also are invited, those who can produce these products from within Africa and Zambia to be specific, because we have lithium here in Zambia. We have all what it takes to produce all this. When it comes to solar panels, we have the silicon, we have those rare earth metals, we have them, we have germanium, we have boron, we have everything. So we need foreign investors to think about coming here in Zambia and produce those products here in Zambia.
Thanks, Richard. I think we're going to hand over to the floor now for some questions. It would be really interesting. It can either be a question or it can be a comment. Obviously, who we've had up on stage has been public sector and customers, and just a lawyer. So it would be interesting just to understand if there's any IPPs or funders that would want to make a comment or have a question about what we've just discussed.
Thank you very much for a very interesting discussion that was ongoing. My name is Rugube Peace. I'm with Ministry of Energy Zimbabwe. Just wanted to find out from the gentleman from Caledonia. I think he pointed out that he is happy with a lot of interventions that government has been introducing in the energy sector. But I think there's an area where he then spoke to the issues around policy inconsistencies that he seems to mention that he is not very happy with the policy inconsistencies that government continue to introduce, which threatens the structure of the intensive energy users group, which they are using to then arrange for their own power supply. I wanted to find out exactly what are these policy inconsistencies so that we can be very clear what are the issues, so that possibly we could have way of attending to those issues.
Cavin, are you happy to respond?
The one glaring issue about IUG is that, like I was saying, that it was created as a under facilitation from government as a way of assisting high energy users to have consistent power supply, as well as also sort of supporting the private generation initiative that we were talking about. But if you look at its existence right now, because we don't seem to have sort of continuity or certainty in terms of how much more can it do. We are growing, like I said. I think Ahmed also mentioned that we are growing and we are continuing to ask for more power. Whilst we can do what we can do in terms of what we can generate, or what arrangement we can do with the IPPs outside the IEG arrangement, but in terms of its support and creating the strength that we need, we see that, okay, I'll be forthcoming right now. Right now, as we speak, they are in quandary with ZRDC. There's an issue that's threatening that we may not have power in the next month. Can the government do something about that so that that doesn't come to be felt by the people that are supposed to be served by that arrangement, number one. Number two, the issue that I think Mangarendui talked about in terms of the wheeling charges or the use of system charges. Those issues are not supposed to be issues that must be left unresolved for too long. Because you can't have a situation where you are discussing a use of system charge for more than 2 years. You can't be wobbling between IUG, Chamber of Mines, and ZERA, and ZRDC without resolving that issue for too long. There must be framework, especially from the ministry or even from the government in general, to be able to have a clear arrangement that says these things are supposed to be done this way. Whether it is because of ZERA not stamping the authority or fear of disrupting systems, we're not sure. But those things need to be addressed, and so that what started as a good initiative can continue to serve the purpose that it is meant to serve.
I don't think it's matters of policy inconsistency. These are matters of how people negotiate, navigate policies that are good, they are there, they are solid. How you come up with your tariff negotiation. It doesn't really mean to say that the policy has been inconsistent in any way. Because what we have actually seen is a lot of good policies coming from government at the moment, supporting us to, and it's evidence. Our ability to be able to fund this and put in these generating plants, it's a solid testament of the sort of policies that government has put in place to enable the environment for us to be able to do that. So whether it's duty exemptions or it's a framework, for the fact that we have got an independent regulator here, it's good. It's a good referee, and is refereeing on legal frameworks that have been put in place and positive renewable energy policies that we are seeing. So I would say I differ from him in the sense that probably the context and the label that has been put to it is not correct. It's these are matters of negotiation rather than policy inconsistency from a government point of view. I'm just talking from the manner in which it has come to me as a consumer. Thank you very much.
There's two more, Gemma. Is that fine? There's one there. Oh, there's three more. Two. Okay, I'll let you decide who gets the mic.
Thank you so much. I think what is at play is how dynamic systems are, and as they change operationally, you then encounter certain challenges which you resolve as you go. So in that dynamic state, if then the processes take longer, then you elevate. So I think, like you said, we, as far as we're concerned, we have an independent regulator, we should deal with your issues. But if you then fail to resolve the issues amongst yourselves, it's good for you to elevate to us. We will come in from an arbitration point of view, but also looking at how best we can refine the policy to ensure that it works better. But as we open up the sector, there will be teething problems and challenges. So I just want to acknowledge that.
My name's, sorry, I'll stand up. Guy Dixon from Osprey Renewables, a Nairobi-based energy investor. And it's commendable looking at both Zimbabwe and Zambia compared to Kenya in terms of the energy regulations and how much they're advancing at the moment. One thing that we've not touched on, and I'd like to hear the panel's views on, is, especially within Zimbabwe, how people are approaching currency control measures and the structures that are in place there, because I don't think it's been discussed so far. Thank you.
Thank you so much. I just wanted to say that as Zimbabwe, we do have what I did indicate as the government project support agreement, which is meant to de-risk power projects in the country. So you find that under this government project support agreement, they are de-risking all generation projects that are being implemented, including issues to do with current convertibility. So there is an undertaking from government to ensure that all investment that comes into the country does also get repatriated from the countries the investment has come through. And there's also an undertaking that should the power being sold in the local market, there is also that currency exchange. So that also has been covered under the government project support agreement. Further to that, I just want to mention that as the regulator, what we have done is to ensure that we've opened up the market for generators or for investors to identify customers of their own choice. I think we do have the mining sector being one of the major project promoters, where you can actually then negotiate with them in terms of the PPA, which means you can also negotiate in terms of the currency you would want to sell your energy to. But if it is selling to the national utility, which actually pays you in the local currency, there is that undertaking from government through the government project support agreement to then ensure that you actually repatriate the funds that you have invested in the country, repatriate the dividends that you, and even also the loans that you have borrowed. So there is that guarantee that is coming from government to ensure that there is investor confidence. So there are several mechanisms that you can actually utilize in terms of ensuring that the current risks are mitigated.
Thanks so much. Thanks everyone for listening in. I think that actually our time is up, but obviously happy to continue the conversations off the floor.